Welcome to the Pirls Stock Market Commentary video, your weekly window on stock market technical conditions, featuring the proprietary bull bear point and figure market breadth summary chart for December 2nd, 2018. Market breadth. With this past week's market advance, our bull bear point and figure ratio at 0.60 rose from 0.42 last week. The total count of securities in bullish or bearish patterns increased 4% to 2,855. The count of bearish stocks decreased 8%, while the count of stocks in bullish patterns increased 31%. The Pirls PNF Market Breadth Summary Chart shows us a market now 12 weeks in bearish territory. Paid subscribers have access to the OpenOffice Calc data, from which the chart is generated. You may become a paid subscriber by visiting s2pmarketsignal.com, clicking Membership, clicking Register, and following the prompts. To receive the weekly Pirls Stock Market Commentary via email, free of charge, simply enter your name and your email address in the spaces provided and click Subscribe. The well-known market breadth indicator, the Nasdaq McClellan Summation Index, rose 129 points for the fifth advance in 13 weeks, at a negative 620.65 points. It continues below all 8 tops above plus 100 in the last 30 months, and it continues below 4 of the 5 bottoms below minus 100 in the last 30 months. Volume analysis. In this week's volume analysis, the Nasdaq Composite Index ended in accumulation mode, with average daily volume lower than the prior week. In the last 2 weeks, the Nasdaq had 4 accumulation days and 1 distribution day. Accumulation days are counted when the index closes up on higher volume than the prior market day, while distribution days occur when the index closes down on volume higher than the prior market day. Last week, the Nasdaq ended in neither accumulation nor distribution mode, on lower average daily volume. Momentum. The CCI 20 daily is now at a positive 40.53, up from a negative 134.32 last week. At Monday 11/19 close, the CCI 20 daily formed a zero-line reject pivot short entry signal, pivoting inside the plus or minus 50 range required for a valid zero-line reject long entry signal. At Monday 11/26 close, the CCI 20 rose above minus 100 to exit the trade. The result of the trade simulation was a loss of 173.8 points on the Nasdaq, or $3.63 per share of QQQ. In Woody's CCI trading system, 6 consecutive bars above or below zero are required for a change of trend. The weekly CCI 20 of the Nasdaq Composite Index began a Woody's downtrend 2 weeks ago, while the daily CCI 20 began a Woody's downtrend 7 weeks ago. The CCI 20 weekly, in a Woody's downtrend, rose to a negative 101.06 from a negative 173.93 last week. It continues outside the plus or minus 50 range required for a valid zero-line reject short entry signal. Industry rotation the last 2 weeks. All of the top 5 industries are positive, and all of the bottom 5 are negative. Summary: retail and some tech on the top. Oil, oil services, and some tech on the bottom. Bullish: oil services continues in the bottom 5. Oil has re-entered the bottom 5. Semis has entered the top 5. Gold and silver has left the top 5. S&P retail and comp tech have left the bottom 5. Bearish: REITs has left the top 5. Computer hardware has re-entered the bottom 5. Focus this week. From www.investmentwatchblog.com. The sky is falling sideways. Where are the risks? The following are some key points and charts. while many analysts are talking about the sky falling in stocks. The chart below reflects that the S&P 500 may simply be in a sideways trading range. As well, the S&P 500 remains within the uptrend channel, testing the lower support. Seen this price action before? Yep, back in 2015-2016. At that point, the S&P 500 has just hit its 161.8% Fibonacci extension level at the top of the uptrend channel. That prompted a sideways trading range for 20 months. This year, the S&P 500 hit its 261% Fibonacci extension level and has proceeded to trade sideways yet again at point 2. This has lasted 10 months thus far, but a resolution is nearing. If the sky is to fall in stocks, the trading range and channel support need to break lower at point 3. If dual support breaks at 3, selling pressure in the S&P 500 could see itself 10% lower rather quickly. As long as support holds, this bull is still alive. Stay tuned. Thank you for watching this week's Pirls Stock Market Commentary video featuring the proprietary bull-bear point and figure market breadth summary chart compiled by Donald Pirl. www.s2pmarketsignal.com. For Pirls Stock Market Commentary, I'm Cynthia Pirl, hoping that you have been enjoying a peaceful and pleasant weekend, that you are looking forward to a prosperous and productive week coming up, and wishing you true success.